Welcome, everyone. So, if you've been following the healthcare sector, you know that finding the actual signal through the noise of a dense 21-page earnings report, well, it's a real challenge, right? Today, we're completely cutting through the jargon. We're going to break down Abbott's Q2 2026 earnings explainer, and we'll see exactly how their medical innovations are translating into some truly robust income. Let's dive in. Okay, here's our quick roadmap for today's explainer. We'll start with the big picture for Q2, move right into medical devices, and then look at diagnostics and cancer care. After that, we'll hit pharma and nutrition and wrap it all up with shareholder value. Section 1, Q2 2026. The big picture. Let's kick things off with the bottom line right up front. When you're looking at a company of Abbott's sheer size, you really want to start with the macro financial wins. And wow, 13%. That is Abbott's reported sales growth for the second quarter of 2026. In the world of large cap healthcare, hitting double-digit reported sales growth, that's a clear indicator of a blockbuster quarter. It just shows massive top-line expansion across their entire global footprint. But hey, it's not just about what they've already done, right? It's about what they expect to do. So the absolutely crucial point here is this updated figure, $5.45 to $5.60. That is Abbott's raised full year 2026 adjusted diluted EPS, or earnings per share guidance. They bumped this up from their previous range. And why does that matter? Well, raising guidance mid-year proves that management has exceptionally high confidence in their pipeline and their sales momentum for the rest of the year. So exactly where is all that revenue coming from? Well, medical devices is the undisputed heavyweight here, bringing in $5.85 billion just in this quarter. Diagnostics is the runner-up at $3.09 billion, followed by nutrition at $2.14 billion, and established pharmaceuticals at $1.5 billion. It's this incredibly diversified portfolio that's the real engine driving that 13% overall growth. Now, before we move on, we need to decode a little bit of financial jargon that is super vital for understanding this report. It's the difference between reported and comparable sales growth. So while reported growth was that massive 13%, comparable sales growth was actually 4.8%. Comparable growth is incredibly useful, you see, because it strips out the impact of foreign exchange rate fluctuations and recent acquisitions, like, for instance, their major purchase of Exact Sciences in March 2026. By pulling those variables out, comparable growth reveals the true underlying organic performance of the business. Both numbers are really strong, but they just tell two different parts of the same story. Section 2. Medical devices drive growth. Let's see how all this builds into their largest segment and connect some real-world healthcare technology to these financial beats. Total global growth in medical devices is sitting at a very healthy 9% on a reported basis. And while the US market grew by a solid 7%, the international markets really shined here. They grew at 10.7% to reach over $3.1 billion in sales. This growth was heavily driven by low teens growth in electrophysiology, plus some really solid high single-digit growth across rhythm management, heart failure, and diabetes care. Okay, let's do a quick so what check. Why are these sales growing so fast? Ultimately, it all comes down to the products. Back in May, Abbott secured the CE mark for the Libre Duo. And guys, this is huge. It's literally the world's first dual glucose ketone biowearable sensor. By tracking both levels in real time, it helps prevent diabetic ketoacidosis, which is a very serious complication. This is the exact type of groundbreaking tech that directly fuels their financials, which we can clearly see in the 11% reported jump in continuous glucose monitor sales. On top of that, they've also completed the FDA submission for their Amulet 360 left atrial appendage device, so innovation is literally paving the way for income here. And the future looks just as bright when we examine their clinical pipeline. In April, they completely finished enrollment for the Tectonic US pivotal trial, which is evaluating a totally new system for treating severe calcification in coronary arteries. That exact same month, they presented some late-breaking data at the Heart Rhythm Society conference. That data demonstrated really strong clinical outcomes for their pulsed field ablation and conduction system pacing portfolios. So these clinical milestones, they aren't just science experiments. They are the leading indicators for future revenue. And frankly, they are the exact reason Abbott can so confidently raise their full-year guidance. Section 3. Diagnostics and cancer care. Now, let's explore the segment that saw absolutely the most dramatic transformation this quarter. 42.3%. That is the staggering reported sales growth for worldwide diagnostics in just the second quarter. In a mature company like this, seeing a division jump by over 40% in a single quarter, that's enough to make literally any investor stop what they're doing and pay close attention. So what exactly was the catalyst for this massive spike? Well, we do have to clarify that this 42.3% reported growth was heavily skewed by a major strategic move. Specifically, the integration of the cancer diagnostics giant Exact Sciences, which Abbott acquired on March 23, 2026. This connects right back to what we were talking about earlier with reported versus comparable sales. Following the acquisition, Exact Sciences sales are now presented as Abbott's cancer diagnostics business, and it is completely redefining the segment's earning power. And that acquisition is already showing tremendous momentum. The cancer diagnostics results were driven by mid-teens growth of Cologuard, which is currently benefiting from an expanding base of both new and repeat users. But what's really driving this widespread adoption? Well, in May, the American Cancer Society issued updated guidelines that explicitly reaffirmed Cologuard and Cologuard Plus as the preferred screening options for average-risk adults aged 45 and older. When you connect those clinical guidelines directly to the sticky, recurring revenue of Cologuard, man, it just shows how brilliant this acquisition was for Abbott's long-term strategy. Section 4, Pharma and Nutrition Updates. Let's quickly pivot to cover the remaining two foundational pillars of Abbott's business. Now, while they might not have the flashy 40% growth of diagnostics, they are absolutely vital to the company's global stability. First up, let's look at what I'm calling the nutrition turnaround. Worldwide nutrition sales actually decreased 3.1% on a reported basis compared to last year, which reflects lower sales volumes. But here is the structured recovery. In Q4 of 2025, management implemented some very deliberate strategic pricing actions. Fast forward to Q2 2026, and they paired those pricing actions with the launch of some brand new products. The result? A massive $127 million sequential sales increase compared to just the first quarter of 2026. Honestly, it's a textbook example of management actively and successfully steering through volume challenges. Meanwhile, over in established pharmaceuticals, sales increased 8.4% on a reported basis. And that growth, it's almost entirely powered by what Abbott calls key emerging markets. These are countries that represent the absolute most attractive long-term growth opportunities for their branded generics. Sales in these specific geographies hit over $1.1 billion, increasing nearly 10% on a reported basis. And that was driven heavily by double-digit surges in the Latin America and Asia-Pacific regions. Section 5, Shareholder Value and Outlook. So, we've looked at the products, the acquisitions, and the global sales. Now, let's bring the narrative home by looking at how all of this innovation translates directly into investor pockets. Just listen to this definitive, bullish stance from Abbott's chairman and CEO, Robert B. Ford. Our second quarter results reflect the momentum we are building. We expect this momentum to continue and drive accelerating sales and earnings growth in the second half of the year. I mean, that is not cautious optimism, folks. That is a CEO looking at a stacked product pipeline and a newly integrated cancer diagnostics wing and telling the market exactly what to expect. And Abbott is absolutely backing up that confidence with capital. In the second quarter alone, Abbott returned a staggering $2.1 billion to its shareholders. They achieved this sheer scale of return through a powerful combination of robust cash dividends and highly strategic share repurchases. Which brings us to this incredibly impressive number, 410. On June 12th, Abbott's board of directors declared the company's 410th consecutive quarterly dividend. I mean, just let the pure consistency of that number sink in for a second. That 410th dividend is actually part of a 54-year streak of consecutive dividend increases. This places Abbott firmly in the prestigious S&P 500 Dividend Aristocrats Index, which, if you don't know, is an elite group of companies that have annually increased their dividend for at least 25 consecutive years. Their next dividend of 63 cents per share is payable on August 17th. For retail and institutional investors alike, this legacy of returns provides an absolute bedrock of stability, pretty much regardless of broader market conditions. We've really seen today how Abbott is turning cutting-edge innovation into undeniable income. But I want to leave you with a provocative thought based on what we've just learned. With breakthrough, world-first tech like the Libre Duo just hitting the market, how will dual-tracking glucose and ketones fundamentally reshape the economics of global diabetes care over the next 5 years? Will this preventative approach to diabetic ketoacidosis create a new standard of care that competitors simply can't match? It is a fascinating question to ponder as we watch Abbott's momentum build into the second half of the year. Thank you so much for joining me for this explainer, and as always, keep learning.